Hello. In this video I aim to discuss what are higher highs and what are lower lows and what they mean. The basic principle behind a higher high and a lower low is, and I'm not talking about the old 80s TV program with allo, is that when there's a higher high there's the possibility of a continuation or a strong formation of a trend. A good example that we have of that is with Carnival here. We can see a series of higher highs, and a higher high basically is where the trading has opened above the previous high and then closes, and then the next day it opens above the previous high and then closes. And what that is basically there's a very strong movement, a very strong positive movement within that chart, or within that company or index or whatever it is we're looking at, where there's a chance of a very strong bullish trend formation. And they tend to happen at the very bottoms. If you see it, such as we can see with Carnival, that we see reaching the low, the lowest point, very strong support, then we get a very strong movement, and then a continuation of higher highs. And we still get that movement pretty much throughout at various points, but it weakens off. But most certainly at the very beginning we see that. Then we are likely to see the continuation of that within a trend that's likely to be very strong. If you start to see higher highs within a trend, then that's possibly a lesser chance that you were going to see a very long trend from that point. But predominantly, if you see very strong higher highs at the start of a trend from a very strong support, then we're likely to see the beginning of a very strong trend. And basically they're there to confirm the trend, that if we continue to see higher highs, we're still seeing some of a good strong chance of a continuation of that trend in that direction. The opposite then is true if we see lower lows, and I'll just see if I can spot some. Yeah. If we look here, these are the market is opening lower than the previous day, and then we're seeing that basically we're seeing the opposite. Obviously this is within a trend, so it's not as strong as it would be, say, from a resistance, and then we're seeing a lower lows from there. We would see then a formation of a relatively strong bearish trend from that point. What we're seeing here is very strong drops and then moving into consolidation. Before we're seeing a massive drop off through the chart. So we're seeing these lower lows, and then it drops off dramatically and then starts to find support and then bounces on a slight recovery. See if we can find some earlier too. Obviously we're looking back on a chart. Yeah, we've got some lower lows there, so they are around. For instance, here we have G4S, where we have the beginning of some lower lows within the trend, and just basically confirming a very short-term bearish trend there with a lot of low lows. And so as you can see, they do have a place, but they are most definitely the strongest. Higher highs are strong, very strong indeed, if you're seeing them from a very strong support, and the reverse is true if you're seeing lower lows from the resistance, but they can also happen within a broader term of the trend too. And they're just there to add weight to that trend, to add sort of an idea as to whether that trend is likely to continue and the strength of that trend. And we'll also cover various other aspects that you can use to discover the actual sort of strength of the speed of that trend or the momentum of that trend, to see in which direction it's likely to go or continue to go in.